Tesla at 1900, next stop $2,200 a share, and why is our story for today. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters as well as our subscribers. If you enjoy the show, please take time to like and subscribe. So we have an interesting circumstance going on right now with Tesla. The fact is that the stock is up almost another 100 points this morning. And the big question out there is why and what comes up next. So I'll start my show today with a brief tale that I've told before, but I really enjoy the story. I was living in a place called Palo Alto, California, right by Tesla's headquarters because I was a Stanford student. And there was a news report that came out that indicated that there was someone that had died in an accident while removing cones on one of the major local freeways. So I happened to be talking with someone who had worked with Caltrans, the folks that work on our highways, and this gentleman looked at me and he said, "Oh man, those contractors, they always have these issues popping up." So I looked at him and I was like, "What do you mean?" And he said, "Oh, well, anytime you have a Caltrans employee that's on the freeway and they have to pick up cones, there's a giant block of 5,000 pounds of concrete that sits between them and any traffic. Anytime you have a contractor working, they don't have that concrete block that's riding behind those employees. And so a lot of them get killed over time as a result." So I bring this up because I just was amazed at how someone's command of the field could be so intense and high quality that the instant someone mentioned something about their field, the news reporters couldn't figure it out. Everybody couldn't figure it out, but these people, or this gentleman in particular, was quickly able to dissect exactly what happened and why, well before all of the people on the scene could actually figure it out. So I chose to bring this up today because what's happening right now with Tesla is we're sort of in uncharted waters. The original analyst estimates targeted Tesla to rise to about $1,500 a share, and that was about it. And so now we have the very same analysts who are on the top end saying there's justification for the current price point that Tesla is at. And the question mark is, why is that the case? So I brought up my expert example that I just shared for one reason, and that is that something happened about 4 weeks ago that hasn't been discussed since, but that's playing a huge role here. And what that is that there's a gentleman from the S&P who's a longtime analyst there, and he happened to make an off comment. Perhaps it was reported in the news. It probably wasn't an off comment, but basically what he pointed out is that the S&P hadn't seen a change in the form of entry in the form of Tesla since Yahoo had done it in the dot-com era. So he then went on to say that the price target that he had in mind based on the model of what they saw from Yahoo was something in the $2,100 to $2,200 range. So this news hit, and in general, I was like, okay, that sounds good. It kind of makes sense. We'll go from there. But what then happened was the news, we and everybody else kind of moved along from there. So then what happened is the split was announced by Tesla, and it's very clear to everyone that this split was a process to prepare for the entry into the S&P. So the big change that occurred here was that prior to the split announcement, the clarity about the direction towards the S&P was somewhat hazy, even though it was pretty sure. Now that that's a given, it's sort of changed. The whole analytical process has just changed. And we believe that that big change is that it went from an off comment that was made by an S&P executive, we'll have to call him, into a circumstance where this is now the gospel of what's going to occur. So this situation now has shifted from a maybe S&P to a pretty confidently S&P. So basically what has happened is the regular consumers like us don't have access to supercomputers within the big banks, but also we don't have access to PhD caliber analysts and assistants that are spread throughout those banks to figure out what's going on. So it's our assessment that the casual, if you will, comment that was shared by the S&P executive is a metric that can actually be reverse engineered. And when you reverse engineer those numbers, that's how you get to that $2,100 to $2,200 share number that he referenced. So there is I hate to call it anything else, but there's a CYA process where, as we've discussed in the past, what's going on is that if you're an analyst and you come up with something, you're competing with other analysts for business from the big banks and to sell your research. So you actually have a problem, which is you have to do good research, but you also have to maybe take some occasional flyers on things you really feel confident about. So if an analyst develops and delivers a report, he now has the problem that he's got to sell that or present it to clients. Those analysts over time have to demonstrate that they're better than competitors. And the more research you do, the more interesting facts that deliver on numbers, the better off you are. So one of the funny things that's happened is CNBC has a penguin video that shows once one analyst jumps in to raise a stock or lower a stock, all of the analysts start jumping in like penguins. And so basically, we're kind of having the updraft on Tesla's stock price penguin process going on, as is referenced in the CNBC show. So basically, we now have a situation where the analysts are battling each other to see who's done a better job of deconstructing the S&P analyst's assessment of the direction and location of where Tesla's stock price is going. So, as you've seen, we now have people who were barely able to give Tesla a $1,200 strike price who are now comfortable delivering $2,000, $2,500 even target numbers, and the stock price is responding to this. Now, I have to do a segue here to just point out that there's a concept called fundamental analysis, which is basically you take the earnings of the company and you multiply it by its growth rate and you get a stock price, and that's called fundamental value analysis. Well, because the stock price has run so far beyond that, we're now in the zone where people are using other metrics to determine how to price the stock, at least in the short term. It will get back to what you would think of as fundamental analysis, but the entry to the S&P creates a lot of new activity. And so people like myself that are used to fundamental analysis cringe at the thought that you would go ahead and buy stock at a high price like this still and be comfortable doing so. And the reality is that we're kind of in a situation that is not very often charted territory. As we've discussed in the past, the problem with Tesla is it has a very high market cap, and usually companies that make a run to this market cap have generated large enough profits over time that would have been an S&P, years ago, below $100 billion in market cap ago. But Tesla has been in a unique situation trying to build cars instead of building software or other things that have emerged in the recent past. So the process to profits is very different, and and the S&P has its rules about profitability. I would not be surprised based on Tesla if S&P doesn't go back and revisit this profitability rule, because there are certain industries, businesses that have to keep their cash in-house and execute what they have to execute. So basically, what we believe is happening right now is there's kind of a three-pronged reason why we're seeing current prices, and I think we have the green light into the 2100s, maybe even 2500 a share over the next 4 or 5 trading days. With the stock moving at $200 a day, that's not hard to see that occurring. So basically, one, we have this $2,100 price target provided by the analyst. And frankly, when he provided it, he didn't provide us with any charting or other things to say, hey, this is what I think might occur based on the past, and then let me give you all the data behind it. He did not provide that. So the issue for us has been, well, how do we assess what you're saying other than it's something you're just whipping out on us without having carefully reviewed your data? And so I find it interesting because basically these folks have the power to simply go recreate the data on Yahoo and then apply that recreation to what's going to happen with Tesla, hence the movement in the stock price you've seen going on. So now we're in an interesting position because, number one, you have a forecasted price point by the S&P. Number two, you have analysts that have gone backwards to review those numbers and confirm that they're valid, so they can now start offering valid arguments for why the stock price would rise to these levels. Number three, once those analysts clearly start delivering validation for those numbers, you now have the next step in the process, which is large fund managers that are limited in what they can do until they get coverage from the analysts. So now you have these fund managers saying, oh, we've got clearance for X price target on the stock, so they can buy up to that. And especially there's number four that's happening, which is shaping all of this, which is as of the 21st, those of record are part of the 5-to-1 split. So then obviously we have the actual execution of the S&P down the road, but that split, both the announcement and execution of it on the 31st, are two sort of powerful drivers for how and why this whole thing is working. So I have to admit that this is bad to say, but you're kind of suspending logic for about 40 days of fundamental analysis and writing sort of S&P analysis, if you will, in terms of how all this works. And the numbers that you could see spin off of this are amazing. So this morning, I was watching the stock, meander into the up 30 points, up 50 points, up 75 points, then up to the 1920s. And I was like, maybe it'll get to $1,900 today. Squawk Square, one of the folks we watch, switched from being somewhat of a bear into this thing's going to 2,000 analysis from his charts. So in the short term, be it, the next 4 hours, first hour or two into the market, I think 2,000 is actually realistic, but I would not be surprised if we end up in that $2,200 to $2,500 a share zone by the time the split occurs on the 21st. And then we're in this interesting no man's land, because once that split occurs, we're going to get new analyst estimates of where the stock could go. It may stay in that region because of the details I just described to you, but it actually could rise further if, in fact, we do get more analyst support for it. So I have to say that I'm kind of shocked. It's nice to make a little money in it, but it's also a stunning turn of events that was totally unexpected by me. But with the analysts doing what they're doing, it allows some very high-paid people to deliver on this right now. So we look forward to your comments here. Just a reminder, don't forget your 25 leg lifts. Don't go to bed within 4 hours of eating. At least 2 hours, let the food digest a bit so you don't get acid issues. This is Greg for Teslafaninsight. Please like and subscribe. Tschüss, German, au revoir, French, Lehithro, Hebrew, Hoda, Hafez, Farsi, Hey Do, Swedish, Assalamu alaikum, Muslim, Zdravstvuyte, Russian, hello, Ni hao ma, hello in Chinese, and Dobrodzienia, Polish. And we just want to thank you for taking time out once again. We look forward to you joining us on our next show. Have a great day, and bye for now.